2025 May Paper 1, Question 6. Damin is in business buying and selling goods on credit. The following balances were in his books of accounts on 30th April 2025. Non-current assets 50,000, inventory 20,000, trade payables 30,000, trade receivables 26,000, capital 70,000, bank 4,000 debit, purchases 300,000, revenue or sales 400,000. Additional information: 90% of the purchases were on credit, whereas 25% of revenue or sales were for cash. Required: explain the term social accounting, accounting ethics. B. Calculate the working capital of Damin's business. C. Calculate the following ratios of the ratios to two decimal places: current ratio, liquid or acid test ratio, trade payables payment period in days, trade receivables collection period in days. Part D. Comment on two positive aspects of the liquidity of Damin's business. Damin needs to purchase some additional non-current assets for his business at a cost of £25,000. He prefers to make the purchase by paying by cheque. E. Calculate the liquid or acid test ratio if Damin purchases the non-current assets paying by cheque. F. Evaluate whether Damin should pay for the new non-current assets by cheque from the bank account or fund the purchase by some other method. 6 marks. Now let's move to the first section of the question. Explain the terms social accounting and accounting ethics. Social accounting: when businesses are accountable to society, it involves both financial and non-financial factors to assess the impact of business decisions. Provide a clear point followed by a clear development to the identified point. Accounting ethics: these are moral principles or values. Businesses should report with honesty, issue correct statements, and not withhold relevant information. Provide a clear point followed by a development. By doing this, you will be able to gain the full mark of 2 for each of these sections. Question B. Calculate the working capital of Damin's business. How do we calculate working capital? From current assets, we deduct current liabilities. First of all, let's identify the current assets and current liabilities. Inventory 20,000 current assets, trade payable 30,000 current liabilities, trade receivables 26,000 current assets, and bank the debit balance, therefore current assets. Now, let's apply this to the formula. Working capital equals current assets minus current liabilities. Current assets 20,000, inventory 26,000, trade receivables 4,000, bank 50,000, current liabilities, trade payables 30,000, therefore total of 30,000. Hereby, we find the working capital by taking away 30,000 from 50,000, which is pound 20,000 should be the working capital. Part C. Calculate the following ratios. Two decimal places. Number 1, current ratio. Number 2, liquid ratio or acid test ratio. How do we calculate current ratio? Current assets over current liabilities. Whereas for liquid or acid test ratio, from current assets, take away closing inventory divided by the current liabilities. Now, let's calculate the current ratio or working capital ratio. I'm taking the same workings that we had done for the previous section. We have current assets worth 50,000 and we have current liabilities worth 30,000. By calculating this, you find the answer, which is 1.67:1. Remember to show it as a ratio like this, 1.67:1. Liquid ratio: from the current ratio, take away the closing inventory worth 20,000 divided by the current liability 30,000. Therefore, 30,000 divided by 30,000 should give you the answer of 1:1. Number 3. Trade payables, payment period in days. Trade receivables, collection period in days. In both these cases, you'll need the credit purchasers and credit sales. These are the formulas to calculate trade payables payment period and trade receivables collection period. Trade payable collection period, trade payables over credit purchases into 365. Trade receivables collection period, trade receivables over credit sales into 365. As we have additional information, 90% of the purchases were on credit. Therefore, out of 300,000 purchases, only 90% will be considered as credit purchases, which is 270,000. Whereas only 25% is cash sales. That means remaining 75% are 25% cash sales, remaining 75% should be considered as credit sales. Thereby, 400,000 into 75% gives 300,000 of credit sales. Now, let's apply to the formula. Trade payables, as you can see, it's 30,000. Divide by credit purchases, 270,000. Multiply by 365. Therefore, the answer should be with 2 decimals, 40.56 days. Whereas trade receivable collection period, trade receivables worth 26,000 divided by the credit sales worth 300,000 times it by 365 should give an answer of 31.63 days. Part D. Comment on 2 positive aspects of liquidity of Damin's business. So we look into the liquidity ratios. Here I've taken as a sample answer with current ratio and trade receivables collection period. Now let's observe what we had taken before. Based on those criteria, we can comment on 2 positive aspects. So current ratio is 1.67:1. Therefore, the current ratio is at 1.67:1, which is within the acceptable range of 1.4:2:1, which is the industry standard. This allows that the business has a healthy balance of current assets compared to current liabilities, meaning it should be able to meet short-term debts without difficulty. And the trade receivable collection period is 31.63 days. The standard is usually 30 days, which is acceptable. This suggests that customers are paying quickly and credit control procedures are effective, improving the cash flow and reducing the risk of bad debts. I've attached the marking key so that you know there should be 2 identifications and a development, a qualitative development for each one of them. Application is highlighted in yellow. Damin needs to purchase some additional non-current asset for his business at a cost of £25,000. He prefers to make the purchases by paying by cheque. Calculate the liquid or acid test ratio if Damin purchases the non-current assets by cheque. Remember, in this case, the non-current assets will increase by 25,000 and the bank balance has 4,000. Now you're purchasing a non-current asset paying by cheque, therefore minus 25,000 will give 21,000, which is a credit balance in the bank. Therefore, it is considered a current liability, the reason being that it's a minus figure in the bank, therefore it's considered as a bank overdraft. Now, let's recalculate the current assets and current liabilities. current assets, we have trade receivables worth 20,000, 26,000 and inventory worth 20,000. Therefore, the total current assets are 46,000. Whereas current liabilities, trade payables worth 30,000 and bank overdraft worth 21,000. Therefore, a total of current liability worth 51,000. Now let's recalculate asset test ratio. Current assets 46,000. Take away 20,000 the closing inventory. Divide by 51,000 the current liability. Therefore, the final answer should be 0.51:1. If you compare this with the previous calculation, the asset test ratio was 1:1 prior to this purchase, whereas now it has reduced from 1 to 0.51. It has worsened. F. Evaluate whether Damin should pay for the new non-current assets by check from the bank account or fund the purchase by some other method. Remember, the level descriptor is used in order to award marks for the student's response. AO2 application 1 mark, AO3 analysis 2 marks, AO4 evaluation 3 marks. Let's see the highest level in the level descriptor: accurate and thorough knowledge and understanding. Application to the scenario is relevant and effective. A coherent and logical chain of reasoning showing causes and effects is present. Evaluation is balanced and a wide-ranging, using financial and perhaps non-financial information, and an appropriate decision is made. Now, let's read a sample answer for this question. Paying by check, Damin may be able to get the best price and the best discounts. This is my point. There will be no additional cost associated with the purchase, such as interest payments. Development 1. This allows Damin to keep the expenses low, which helps to increase profit for the year. Development 2. Now my evaluation. However, an alternative payment such as buying on credit will allow Damin to maintain a suitable liquid ratio as per industry standards. This is because buying by check will reduce the liquidity ratio to 0.51:1, which is below the industry standard. As a result, Damin can maintain a positive cash flow. To conclude that the payment should not be made by check, the reason being Damin will still have to pay interest on the overdraft of £21,000. Remember to give your final decision in the conclusion. This may vary from student to student. Now, we had come to the final part of this question. We had solved all the questions of 2025 May Paper 1.